Thank you very much. So today we're going to talk about digital banking architecture and the trends in the industry, in that particular industry. And I thought before we start actually dipping into architecture and all of that type of things, a number of questions are coming up at client side normally with big banks. And everybody's asking, but how long do I have for the challenger to challenge me? Do I really need to start there? Do I really need to change? And I thought that before we talk about the trends in the architecture, I would just show you what the challenges are doing in the marketplace to make you feel a little bit less easy about what's coming through. So I have a small little video.
Okay, number 57.
Can I have a decaf cappuccino, please?
I have to pop you on hold while I transfer you to the coffee department. Wait there, one second.
Hi there, how can I help?
She said she's put me through to the coffee department. I don't quite get
Coffee department, sorry, you got through to the lager department. Give me a minute.
it. No?
Would you like to make an application for some food or drink today? I just need the first line of your address and your mother's maiden name.
What?
I'm just going to pop you on hold while I transfer you to the wine department. Is that okay?
Double Havana 7 and Coke, please.
Oh, blimey, that's completely on my reach. I'll put you on hold for that one, okay?
We reserve the right to cancel your fish and chips without prior notification, whereas you do not notify us in writing.
Business is important to us.
Hi there, what can I get you? Thank you very much, that's £5.
Cappuccino's £5.
£6, increased charges. Certainly, that'll be £100 of unnecessary charges.
Oh, how much? For a wine and a... What?
Yeah, so it's £6 for the wine, and then the rest is unnecessary charges.
No.
I'm afraid I can't accept your payment at the moment.
I'll get you in a minute. I'm going to pull you over the bar. We both over here having a conversation.
I can put you onto our conversation department.
Awful.
Yeah, it was awful, yeah.
Eventually I felt a bit angry and I wanted to give up.
Wherever you go, if you pay for a service and it was bad, you wouldn't go back. The service was absolutely terrible, and I thought I'd never come back again.
Thank you for your custom today. Would you mind taking a short survey? Your feedback is so important to us.
There we go. So this is what you have to put yourself against nowadays. So not only the challenges are pretty good at technology and don't have to deal with a lot of the legacies that banks have, but they are very creative communicator, and that type of video is actually becoming viral on the internet, and it does crack up people quite a bit. Yeah, so they are they're a real threat. Yeah, we have done, and we were at a session yesterday with some of the OP Bank colleagues, and I think people are saying there's 30% of the market shares of bank which is directly at risk, and in the next couple of years, the threat is kind of increasing really significantly. So they are there, they are disrupting the market. It's quite different depending on which country you're in, but it is really something real. Yeah. Anyway, so basically today we're going to talk about the trends of digital architecture in banking and the challenges that banks are finding, and actually start speaking on how they're kind of addressing all of that. And we're also going to talk about what's coming next and some of the new things around blockchains and things like that towards the end. So I just wanted to recap before we go further on the challenges of the industry, of the banking industry. I don't know who in the audience is part of a bank. So I guess that's 10 of you. So basically, the industry is really not feeling comfortable at the moment for a number of reasons. Obviously, digital has been coming forward, and a number of banks have started to put a new operating model around digital. It was pretty much in the front end. It was kind of the channel department for a while, and then banks have realized that actually, having those that digital department was not working very well for a number of reasons, because it was primarily kind of the technical people. So a number of the banks now are trying to revise their operating model and actually find something that works much better and start splitting the business and the technology divide much more. So there's a lot of that happening on the ground. Obviously, the banking industry is heavily regulated. In Europe, PSD2 is coming, and the regulation are forcing the bank to open up to challenger, and they're really forcing banks to open up so the competition can take on. So part of PSD2 is to provide open APIs and things like that. So a lot of the banks are now regulated to be more open. This is definitely coming through there too. Obviously, there's a lack of digital talent. I think we spoke about that in a number of the areas before. There's very talented people, but there's not very many of them. I think the industry over the last 10 years have been really focused on outsourcing and dividing the duties of every engineers. Yeah? So you had people to define, design, you had people to develop, you had people to test, you had people to operate. And people really we went through in that direction to kind of get cheaper service, outsource better, and we really created silos into the job of what should be really the job of a software engineer end to end, yeah? And we divided all of that, and now we're really liking it, and bringing it all back together is really difficult. So we're in a marketplace where people only know how to design, or only know how to speak to client to get a requirement, don't really know how to develop or test it. So that talent is very rare, and bringing all of that back together is actually quite challenging, especially after all the outsourcing we've done on all the movement to some of the low-cost country. Trying to kind of recreate that is actually a challenge. And one of the things I've seen at one of my clients, we did fantastic job at building a digital center transformation, and we had, apprentices, and we skilled them up. And they've done 2 projects, and they were a great engineer, and they just flew away to somebody else because their talent is so scarce that they get super great offer. So not only you have to build the talents, but you have to retain them, and that's really, really critical for banks, yeah? Obviously, there's the new entrants, so we talked about that, when we looked at the Tandem kind of commercial. They're very creative, they're there in your face. They tend to specialize on a particular segment of the industry and do really, really well, something that the bank doesn't do really well, and that's how they start entering the marketplace, yeah? Obviously, time. Apple has been there and has been setting the standard. Everything needs to be snap, snap, snap. Otherwise, the customer gets bored. You could see it in the video as well. The expectations are really high. They don't really care if the bank has 900 backend system or 1,000 backend system that they had acquired over the time, and they can't kind of keep in sync. Yeah, because actually most of the big bank in the UK and I think in Europe have thousands of systems in the back. It is not rare to see. Obviously, data deluge is another challenge. If you imagine 1,500 systems all making some level of data coming out of it, data quality being quite poor, I think a lot of the banks have launched big analytic programs saying, analytic is the way forward, starting to collect all of that and not really being able to do much with it because the quality is not great, they don't really understand it, and it's just far too complicated. Who can understand 1,000 systems data that were thought by very different people in very different ways, yeah? So that's really, really challenging. And that's a shame because data is actually quite precious for a bank. a bank is having insight on you as an individual more than anybody else has. They know when you're buying your house, they know when you're buying your car, they know when you did it, they know if you're starting to buy diapers or if you're starting paying school fees. They know so much about you, probably much more than the Google and the Facebook of this world, but they don't really use it. That mine of information is not quite used because people don't really know how to make sense of it yet. And then last but not least is culture. So big banks have very siloed organization, most of them, although when I came through, the big barrier to change was culture. You have people sitting, so the business sitting on their budget, and they don't want to let it go anywhere. They want to decide what to do. The technician really be taken as people that don't really have a brain but can do IT and just do like tech was commodity, like something that's not very valuable. So like a complete gap in between the business and the IT. And then the operation people that are like, the firefighters of this world, the one that just come and rescue things when things happen. So those silos are really, really hard to break. We're moving towards that. IT is not a commodity anymore. It's the strategy, it's the front, it's so your business differentiator, it's the thing that are going to make you successful as a company or not. And so changing that focus and making sure we're blending the boundary of operation and business is actually absolutely critical. So basically, as you see, it doesn't feel very comfortable at the moment being in a bank because all of that is pretty big in terms of challenges. And despite all of that, you need to find a digital architectures that work. So here on the left-hand side, this is what we define, as in the Accenture methodology as a high-performing bank. Basically, becoming digital is adding more to what a high-performing bank was. So a high-performing bank is a concept that we defined probably 5 years ago, which was, much more customer-centric, at any time, anywhere. You just need to do things once. You do a lot more straight-through processing and all of that type of things. All the goodness. I think most of the banks have not really managed to get into that space yet. And digital transformation is adding a lot more things to the party, in the sense that suddenly not only you need to have a great bank inside out, you just need to expose things to the outside world, like the fintech industries with APIs and things like that. You need to find new business models, and you need to kind of start scaling those things. You need to start designing for analytics and use all of that data that was not used before. The customer wants personalized conversation. And the segmentation that happens at the moment in banks, you in that age bracket and you earn that much is not sufficient to please the customer. Customers are much more savvy than that. Somebody that has, let's say, 45K a year in revenue and live in an apartment and has a degree and is kind of in the middle of a career move is very different than somebody that has 45K and is an established plumber in the same age bracket. They have very different need, they have very different future, they have very different opportunity in front of them, yeah? In the same way, each individual is choosing a way to be in society. Some of us decide to be single, some of us decide to be in family, some of us decide that actually they just want to be married and no kid. All of those things really impact you as a person, impact on who you are. And you can't really be defined by just a kind of an age bracket and a salary and in a couple of the things you're consuming. You're a real individual. So pushing, segmentation beyond beyond the numbers is actually really important. And obviously, taking opportunity of all the new technology, being digital inside out is key. So using cloud and just making sure everything is running on as low cost as possible. So basically, this is kind of what's driving a new digital architecture. But most of the time, I think a lot of the bank we're speaking to get stuck a bit here and starting to explore in there. That's pretty much what's happening in the market at the moment. So basically, to kind of look at all those things we need to do and the constraints, I think there's been two approaches that are possible. I think a lot of banks are just giving up. They are deciding that this is just too hard to actually rebuild the bank and then be that agile and be that low cost running and actually do all those great things, because those 1,000 systems, they're so complicated that if you actually try to do all of that yourself, you just wouldn't start. So a number of banks have started to start a new bank. So they're actually creating a new business unit on the side of the bank, starting from scratch, so they don't have to deal with legacies and all of that, and actually pushing a customer segment to it. We see that happening quite a lot in the industry. A lot of the big banks have done it, like Hello Banks, BNP Paribas, and all of that. And basically, they're gradually moving some of their customers into the challenger bank, and actually kind of coming up with a new strategy around that. A lot of the bank, they don't do that. They decided to start combining the old and the new. So the legacies, the system of record, and the new. This is where we're going to focus today in terms of what are the trends in each of the area. So we have put a model together to kind of explain what are the trends to mix the two and what's coming in each of the area. So the system of record is basically your legacy, is all your data, your processes that are just there. Obviously, if you want to do digital transformation, there's a number of added services that you need to add to that being analytics, that being a number of process integration and things like that. And then you have your system of engagement. So those are the three layers we will talk about. So this is kind of a graph, well, it's like a kind of an architecture picture to kind of dip into the details of those three things. So basically, I think the key thing is to show that the bank is not in a box only anymore. There's an ecosystem that's there next to it, and you need to kind of integrate with it. And that's probably quite new. The system of engagement, we're going to start looking at it, but there's a number of trends around that. You have a lot more ways to interact with a customer than you used to before. The number of services, obviously some things around business process, analytic, data, cloud integration, all of that is actually new added value services that are critical to add to your banks to do the digital transformation. And obviously service of record, the key there is decoupling evolution and revolution. But I'll go into each of them into detail. Yep. Okay, so the trends on the system of engagement. So the system of engagement is the one at the very, very top. So obviously, we're interacting with the customer in many ways that we were not interacting before. So I think what you can see on the market now is a lot of customer and colleague-driven experience development. So Accenture has acquired Fjord a few years back now, and I think a lot of the work we're doing now is customer-driven. So the dynamics of the conversation when we build system is actually very different. We think about the customer first and what they want before you actually go and think about the tech and how you're going to make it happen. One of the things that's absolutely critical is to make sure something that you're going to create in terms of tech is landing in the marketplace properly is testing, customer testing. And to do that, a number of our customers have like separate environment where they have, they call it a system of innovation, where they'll mock up, it'll be a bit smoke and mirrors and it'll be quite fast, but it'll be just for a few set of users so they can have a taste of what the market says about their product. And only when they feel like this is the right product, after they tuned it, after they tried this or that or this different variant, then they'll build it end-to-end in their bank. And actually, one of my customers is doing that quite heavily at the moment. And this is great because before it was taking 12 months to go from inception to production. And actually things were not working well with the customer. Now with a bit of smoke and mirrors on the side, we go super fast to production, 2 weeks. We still need to kind of do some data dump and make sure everything is kind of there. But we can see if the market is reacting well to a particular fixture before we actually make the investment of modifying things up. Yeah? So really important for the bank to keep agility, at least, on the connection with the market, beside the legacy things, because the legacy is really the slowing down process. Obviously, one of the things that's quite important as well is like video and augmented reality. So before, websites were pretty much some text and a couple of pictures, but now we're quite far away from that. I think people want experience, and video is actually starting to ramp up quite heavily. So us as architects, when we're designing a system of engagement, we definitely need to think about new medias and new ways of delivering content, which are quite new. Yeah. Speed and availability, so that's definitely the Apple side of things. So a big move on lightweight architecture. We had some session today about that. I think the container things definitely happening as well, and helping in that side. Microservices, PaaS, and commodity hardware, definitely all of that help you kind of go faster on your system of engagement. And from what we can see in the industry, I think banks are quite reluctant to go to cloud, but the system of engagement is the place where they normally go to cloud first. Yeah, so they would have normally private cloud for the data or for the agile services, but the top of the engagement of how you speak to the customer is the bit that they'll feel less reluctant to go, because it's stateless, because it can go quite fast, and it can have quite a lot of demand. So potentially this is kind of one area where people kind of start looking at moving to cloud. Obviously, there's a lot of new things coming up. I think there was a session on Internet of Things just next door. One of the things we see as well is biometric is starting to come back in a good way, in a sense that before biometric was quite clunky, were really difficult and all of that. But nowadays, a lot of banks are doing voice biometrics. So you call your bank and you don't type any number anymore. You just say hi, and they know it's you. And they link you to your bank account, and they actually do all of that without you even saying much. Yeah, so and that's fantastic. I think a lot of the banks are starting to do that, and this is kind of giving you the security you need, but in a very customer friendly way. Obviously, you need to be a little bit open to that type of technology, but if you're a technologist, I'm sure you would be, and honest technology. Okay, so those are the trends on the system of engagement in banking, and I think this is quite generic to the industry as well. Okay, so system of record. So after the top, we're just going at the bottom. So this is the hard piece in banking, and a lot of the bank keep it for the end or don't even want to look at it because it's too hard. I think this is the thing that are going to make banks triple, because if you just move fast at the top and you don't really keep everything in the back moving, at one point in time you will not be able to move any longer. Yeah, so it is really important you try to get the system much more agile than they are. And that you do that in front of offering new services. There's so much you can do without really transforming your system of record. Yeah. And this is quite hard work. Do you want to evolve your system of record, or do you want to make a revolution? I think when you have the bank I was working on before had 1,500 system in the back end. Yeah, they couldn't really have a blanket statement. We're going to evolve, or we're going to make a revolution. We had to look at it per business area. So retail banking, this was the approach. Commercial banking, cards, this is what we were doing. So basically, you have to start breaking down the problem, because this is really complicated stuff we're talking about, and it does require a lot of work. But once you have an approach, which is either you evolve or you revolve, you can take the right approach around robotic or automation, yeah? Because all those systems, very often, you have manual interface in between them, or you have file interface, or you have batch interface that take days to work. So if you decide to evolve your system, things like Blue Prism, automation, and robotic can help you kind of go much faster, trying to kind of make them feel like one item. Obviously, if you're deciding to stay with a system, better integration is definitely key. And moving, having a proper API strategy and doing the right point of integration is definitely the right thing to do. So by mixing and matching those things once you have your strategy laid down is definitely helping moving your system of record to be more efficient. One of the things that's really hard in the system of record area is also the availability and the real-time enablement. So I know a few banks that have major struggles to actually do mortgage application processing in real time. So, like the first mortgage application processing we put with one of the banks I'm working with 3 years ago, after 5 o'clock in the afternoon, the system was not working anymore. So the online interface was not really kind of connected to the back end because the mainframe in the back were, built 30 years ago, and they used to, be finished at 5 o'clock. So it was really hard for us to move, that type of systems that had so much things built on that nobody really understands how things work, to actually having something that's 24/7. Because not only we're talking about one mainframe, but there was like so many depending systems on that mainframe, those batches running and all of that type of things. And actually new volume coming from the internet channel. So the type of headache you're having trying to move something that's not planned to be 24/7 into 24/7 item is actually quite difficult. In the same way for straight-through processing, because all those batches are running at different time for a particular reason before. So having to kind of re-architect those bits are taking time. So not to underestimate, it took us 4 months at that particular bank to have a map of all the dependency in the system of record, a theoretical map to actually document how everything was working and to make everybody feel confident we had it right, because nobody felt like we could have it right. Nobody had documented it before. We had to do a couple of production tests, which is moving the batch schedule by half an hour or things like that. So we could actually follow a map was actually accurate and give people confidence that we got it, and we could start playing with some of those parameters to make the systems more available. So basically, so I think we just talked about that quite heavily. I think high availability and resilience is another thing. So most of those backend systems, they are like on IBM mainframe, and they have it's more like the hardware that's kind of there and never blink. This is kind of how they've been built, yeah? So they're not necessarily resilient from an architecture perspective. They just never blinked before. And I had one of my clients saying, well, we don't want to re-architect that DB2 things because we have it there for like 20 years and it just blinked 2 times in that period. Thing is, when you start adding volumes to all of those because you have a new channel, you start playing with the batches and you start kind of pushing the performance in smaller windows and things like that. I think all those systems have a bit, are under strains. So it's not to underestimate to re-architect. Okay, so that was system of record. So that's pretty bleak, but it is needed because otherwise, if you don't do all of that, then you can't really have a proper digital service in the front that's, fast running, that's working, that's giving the feedback to the customer. And then the layer in the middle is how do you actually make sure that you bridge the gap in between what you have and what the customer need, and add all those value-added services that are required to make that experience really personable and really high impact. Obviously, big data and real-time analytics is fantastic. I think a lot of the banks launched a number of analytics programs a few years back. Everybody recognized data is great. I think a lot of the banks didn't really get much out of it. Besides, we have a great program that do analytics, and a couple of people that came up with a bit of insight on this bit, I think we think the reason why those were not particularly or not as successful as they should be is because it was not really applied to a problem statement. I think now with a customer-driven user experience, I think analytics is really thought through from a customer perspective to start with, and people are starting to define the data that are required for a particular experience and really build the insight for that particular journey, rather than a big blanket statement of let's try to get all of that data and see what we can do with it. Understanding data is complicated and it needs to be done at the right level of granularity. Otherwise, you just don't get the insight you would just need. And we've seen that in a bank in Dublin. They managed to crack it up. They have a program now running for the last 3 years, and they're so good at it. They have like 250 microsegments for customers, and they're so good at it that they can predict when you're going to get at the cash point next time on how much you're going to take out, yeah? Or they can just predict that in the next 2-3 months you're going to make a mortgage application because the last time you did buy a house, it was that time when it was in that area, and people like you normally, need 5 years, and so they're actually really getting spot on. They get so much insight out of it because they have spent the time to kind of look at all those experiences and really look at what are the jobs the customer needs to get done. What are those jobs that the customer gets? And then you really kind of be good at understanding when they need it and why they need it, and then just be there just before the customer needs it, yeah? So it is hard, but it is possible, and we see it happening on the market. And I think once banks, this is the golden goose for bank, that insight on the customer. This is probably the primary things that doesn't make bank a necessarily commodity if you look at challenges and things like that, yeah? Cloud service integration, obviously, we talked about cloud quite a lot for a number of reasons. So it's obviously much cheaper to go on cloud in terms of running your infrastructure. Banks, obviously, on the back end on the data is very hard, but, on some of the system of engagement value-added services, it's quite easy to have a cloud service. So just to give you an example around cognitive computing, we are currently building an asset, like a financial digital assistant, which is on Watson. And we're also doing it with a platform called Nuance from Nina, and all of the services are running as a service. So when we go and sell it to bank, we just have to integrate with it, and it's very, very simple type of integration. It's already running as a service. It's in data centers that have the right accreditation levels and all of that. So those added services, sometimes they are very easy to kind of plug in, and the cloud integration is absolutely key for that. And obviously cybersecurity, so this is obviously in the front of every bank's mind to be super secured. There's a lot of, biometrics is fantastic. It's actually coming up at the forefront of everything now. We're doing a lot of digital signatures, and there's a lot of progress made in that space by a number of either fintechs or some of the main industry, obviously not to be overlooked. Absolutely critical for banks. Okay, so that was the trend into the value-added services, and I'm sure, during the sessions that you've had, you would have had a view a little bit of that. It's just kind of giving you a bit of a test of what's happening and what is key to focus on. So, trying to summarize that up into kind of advice or principles for us architects when we actually go at doing banking architecture. Obviously, at the front, choose lightweight architecture when you can, do open technology as much as you can. If you can move those things to the cloud, don't hesitate to do it. They are stateless, they are the one that you can just easily do that movement to. Connect your system with API. So I think a lot of the banks are still very reluctant, even if the PSD2 regulation is coming to open up to bank. I've seen a lot of banks being quite successful into creating new business model around API. So in the UK, for instance, Barclays and Santander, they have API sandbox, and what they do is they give the API to the fintechs people, say, go and innovate and use my API. And then when people, and there's a number of business models that can come up from that. Either the banks ask, for some exclusivity on the service provided, or the banks make the challenges, or the fintech pay for the service they're using and all of that. So this is very, very important, for the bank to open up and embrace the future. I was at a conference in November last year, and I think somebody was talking about the petrol industry, yeah? So, some kind of commodity industry. There was the petrol industry. So there's not that many players in the petrol industry. worldwide at this point in time, yeah? You probably have 4, 5 maximum of people kind of really providing that commodity. If you think about banking, you would have a number of banks which is outside of this world, globally, at a global level, yeah? You probably have easily 10 banks in each of the country in the world, yeah? Which is a really, really high number of banks. As things are moving on the boundaries of the world are kind of getting more fluid, you can definitely imagine that there's going to be some rationalization of, big people processing payment or big people doing, foreign exchange currency or things like that, yeah? So those things and opening up and being, setting yourself up to become one of the leaders in this area now is absolutely key. Because I think once the challenges would have used some of those, they'll continue growing, and then the market share can start disappearing, but you will just completely be losing that market. On the analytics and robotic, obviously, those are quite key. Robotics, I think, is a very easy way to connect back-end system together. When you do a recording from A to B, and you kind of save some of the typing time. The current client I'm working with at the moment is a big global bank. I don't think there's any. It's probably the biggest global bank in the world. There are more than 50,000 people in India doing. This is really scary. I bank with them, and after I've been working with them, I'm just checking my bank statement much more often, I can tell you. But the benefit they would have by doing robotic and a number of those systems would be fantastic. It's just like they have so many human trying to figure out how do you change, or people typing the wrong IBAN kind of format, worldwide. All of those are quite different, and they're just fixing errors of customers all the time, because either they don't automate properly, or they just haven't spent the time. And unraveling that is actually really, really hard. We architect for resilience and high availability, 24/7 system. Obviously, now we're in a 24/7 world, yeah? So the old legacy, they have their limitation, but, if they have their limitation for too long, they won't be there for too long, because they won't be able to give the service that they're required to do. And, I think one of the things that's absolutely critical for banks is, and I think the crisis didn't help, because, suddenly banks didn't have as much money as they used to. But people have been trying to go to market really fast and really kind of breaking some of the rules of decoupling, and now really kind of paying the price for it. So this is really absolutely critical to make sure that digital banking architecture are moving up. I don't have very much time, so I'm going to kind of go very quickly through that. There's just a couple of minutes left. This is kind of a scenarios of liquid services, of collecting all the data. I think you covered a lot of that in the Internet of Things. Is how you can actually get much better insight on the customer. So I won't go into detail into that, but basically you can do pretty cool stuff, because you have an interface with a customer, which is really privileged. So this was about API as well. So API, open API is absolutely critical, not only to kind of internally for all your systems to kind of be able to kind of call and do things with, or for you to partner with other organization, but also to be meeting the regulation now, and potentially have another mean of doing innovation in the bank by partnering with some other fintech organization. And then one of the other one that I kind of like, and I think it's important to keep an eye on, is new things coming up, like blockchain and some of those protocols. There's a number of initiative at the moment, in between a number of banks to try to implement the blockchains for foreign currency settlement and things like that, and are very, very fast, much faster than the current networks that are used. And I think this is definitely the future. And I think before, I think banks were quite comfortable that an international transfer was taking a few days. I think when those people kind of go to market, they're going to make a transfer in a minute or less, yeah? I think it is making a big impact on the customer, and those are the things that the customer is going to want to see more and more often. So as architect, when you're looking at your payment architecture, it's definitely quite key to kind of really keep an eye on all those things that are coming up, because they will make a difference, and they're really going to make you stay in the market forever, or just retain market share and just be a follower. That was it for today in terms of digital banking architecture and the trends and what we've seen on the marketplace. So we can open up for a question if you want.
So please raise your hand if you have a question.
Yes, so we all being maybe technical people, architects maybe even, so given the push from the startups, fintech, and who knows where, entries, even Apple and so forth, competing with certain juicy business of the banks and the banks needing to move, but also you're highlighting that the bank is stuck with the legacy DB2 COBOL code mainframes. Are there any quick roads to digitalization? So because you're highlighting, particularly with the back end, a lot of complexity, but what are the quick ways out of the hole?
Quick ways. That's what I was talking about with the system of innovation. I think a lot of the bank, try to have something completely separate than the legacy system, full stack, on the side. That's much faster. And it's a bit smoke and mirror, because obviously you can't replace all the system in one go, yeah? So at the bank I was working with, we would just try things up, new services, so they'll have the front end and all of that, and they'll have their own little databases, and we'll have batches that would run, or people that would manually input data into the legacy to make sure production is kept in sync. We would just try those things on the side to prove their work before we would actually do the work. So that's one of the things that's actually one of the tricks, to keep a bit agile without having to do all the work and only invest when you do it. I think after, there's no, I don't think there's any silver bullet. The work needs to be done. If you want to keep your legacy system, if you don't want to make a revolution and have a new start a bank, because you can do that. A lot of the banks think it's too difficult to do that, so they're starting completely new, which is the other options we talked about. But if you don't decide to do that, there's no magic bullet. You need to do the work and start, re-architecting how all of that is actually working. So a number of the banks I'm working with are starting to enforce the commissioning program, because actually 1,500 system to run a bank is madness, because you probably don't have that many processes that you offer to your customer, yeah? So, but the thing is merge and acquisition. I've been there, and there's only very few customers on this system and very few there, and they have very different type of, and all of that is creating major complexity. So at one of the banks I was on, we decided to decommission a few of the mortgages system. And actually, it was much better to have the people, the customer on those systems. We paid off their loan. We said, look, you owe us that money. You had your mortgage 30 years ago. You don't owe us anything anymore. Thank you. We're just going to decommission all of that. And that was so much more valuable to do, because suddenly they didn't have to pay the running costs. They could get rid of all those machines. That was all the people operating that particular process, just for a very small set of customers. So you just need to go and look at all the details. And some of those things are technically driven, and some of those things should be just business driven. This system is not worth running anymore, or things like that. Yeah? So